Time now for the markets with Leighton Spann. And Leighton, you say U.S. meat exporters are frustrated with one particular destination these days?
I think they are. We'll explain why, in fact, they're calling China a vexing country. Also ahead this week, old crop demand pushes cotton prices up. Traders think the downside risk is significant now for soybeans, and there's more evidence the nation's beef herd is expanding. We begin with cotton, where hot demand for quality old crop cotton stocks pushed futures to their highest levels since early January this week. Doan's commentary says it's all tied into the projections that U.S. producers plan to cut acreage sharply this year. Analyst Mark Gold thinks that here in Mississippi, soybeans will be picking up a lot of acres from cotton in 2015.
I spent almost a full week in Mississippi traveling around the entire state, putting on some meetings, and the general consensus is more beans, less cotton down there. And I've certainly seen it, and over the last 2 years, they've had a lot of catfish ponds being turned back into fields, and a lot of that's going into soybeans out here. So the cotton, I think, needs to want to say, hey, don't forget about us out here. And we've had such an incredible break from $2.25 down to 50 some odd cents in this cotton that I think cotton's trying to hold their own in here, and it should.
On Tuesday this week, Arkansas Farm Bureau's commodity staff was advising producers this week might be a good place to start pricing some beans for 2015 if you haven't already. Extension Ag economist John Michael Riley says this month's USDA projections did catch some grain traders off guard. John Michael, any real surprises out of the supply-demand report?
There were. We've been trending toward a market expectation of more grain available. That was built into the expectations leading into this report, both for corn ending stocks and soybean ending stocks, and we got a little bit of surprise when both of those were pulled down. About 50 million bushels of corn taken out of the ending stock number compared to the previous month. The ending stock number for soybeans was lowered as well, and both of those were lower than expected. So it was a bit of a surprise. And as a result, the market you would expect to increase. We ended the day slightly lower, but a lot of volatility once the report was released. But overall, the market just brushed the domestic numbers off, largely because we did see an increase in world ending stocks for both corn and beans, and that really is what the market now keys in on, what happens from a global perspective, because it is a global marketplace nowadays.
It seems like, as far as corn, that maybe a little stability has come into the market, maybe since that report, or would you still say we're in that volatile period?
Well, if you look at coming off of harvest, we crashed throughout most of the growing season last year. Coming in the midst of harvest, started to increase our overall price, largely because it looks like producers are just holding the grain, and so both corn and beans. So we did see a bit of an increase in the midst of harvest, which we typically don't see. But yes, since then it's stabled off. We've stayed in a pretty tight range of prices for both corn and soybeans up until the last couple of days with soybeans. But for the most part, much more stability than what we saw in the growing season last year.
And of course, I guess both beans and certainly corn trying to make sure they buy some acres here as we approach planting time, right?
That's true. We're in the market of buying acres, and cotton's obviously trying to do what it can on certain days. But overall, there's not a clear winner yet in terms of the acres decision. And not surprisingly, we've built up our stocks with both of these crops, and farmers are really going to have to make a hard choice when they look at their planting decisions for this upcoming year.
And would you say the projection as far as soybean plant acres that is going to come about? I mean, an increase that they're talking about? It
is, especially as I poll producers here in this state, I think there is a bit of a lean toward soybeans. Nationally, the acres decision is going to weigh pretty heavily still, though. It's uncertain.
And I guess cotton is going to be the loser maybe when it comes to increased bean acres.
Where price is at now, most likely, but again, rotations are probably going to dictate this, not price this year.
The trivia quiz is about where Mississippi's agricultural commodities go, and here's the quiz question. What is Mississippi's #1 export market for agriculture? Is the answer A, Canada, or B, Mexico, C, Russia, or D, China? I'll have the answer at the end of the markets. The monthly USDA Outlook report for livestock, dairy, and poultry offered the latest confirmation that herd expansion is underway in the beef sector. The Ag Statistics Service noted that there was more cattle on small grains pastures in the U.S. than has been observed since 2007. Analyst John Roach offers his view of how this situation may impact feeder cattle and the prices offered to producers.
we saw with the cattle inventory report that we're holding back beef calves or heifers, and so we have fewer numbers of cattle to go into the feedlot as we're seeing that expansion occur. So supplies are going to continue to be very tight in feeder cattle, and pricing is going to be dependent upon where corn and fat cattle are.
China's reluctance to increase its purchases of U.S. pork and to even resume buying U.S. beef continues to frustrate U.S. meat exporters. Phil Seng, president of the U.S. Meat Export Federation, told Brownfield Ag News this week, quote, "China is a vexing country. I think we're still trying to figure out how to deal with them." Exporters say they do remain hopeful their continuing efforts will finally pay off, even in this year of 2015. Well, before the feature story, let's check the trivia answer for this week. The correct choice is A. Canada is Mississippi's #1 export market.